And what you do is you take a look at this double bottom. You say, hey, look, there's a double bottom here. There's a potential to go long. SPYs are going to start outperforming the Qs when this chart does start going up. So you buy the SPYs. And that would have been a really good move. Now, you can do this for any two financial instruments. For example, if you wanted to compare any particular stock, let's take a look at Walmart compared to the SPY. Let's see if Walmart is outperforming the SPY. And it is. In this case, back here in February, you should have seen there was a little bit of a bottom here being formed. You could have gone long WMT, Walmart, because it's outperforming the SPY. And you would have been absolutely right. You would have had a tremendous trade here. So normally what I do is, now you can enter this information directly into your search bar here for your symbol search. Or what you can do is you can actually save your ratio charts. For example, one of my favorite is to take a look at the SPY and the TLT. The SPY and the TLT is the 20-year Treasury bond fund. And I'd like to pit these because the trends seem to be quite well defined. And so, for example, back here in September of 2009, you can see that the SPY outperformed TLT. Remember, the first symbol, the way to read this is the very first symbol that you enter into the box. If the chart is going up, it means it's outperforming the second symbol that you enter. And if the market is going down, if the chart is going down, it looks like it's in a downtrend, that means the second symbol is outperforming the first symbol. So during this period from September 2010 through the beginning of 2011, the SPY greatly outperformed the 20-year Treasury bond fund. And then you can see a little topping process here, and the market started going down. You can see the TLT, the 20-year bond fund, started outperforming the SPY in a dramatic way. So that's how you would use these, and it's quite easy actually to set these up. I've got a number of these already saved, and the way to do that is to go over here to your chart settings, go to your ratio chart, and you can actually enter anything in here that you want. For example, if you wanted to do a comparison between two stock issues, it's very easy to do. You can find out which one is outperforming the other one. Let's go with Oracle versus Microsoft. Let's see which one is outperforming the other. Let's get that chart. And what you can do is once you bring up this ratio chart box here, you can just plug in your formulas. You can use the first symbol, second symbol, and then you can also save the ratio so that it comes up into your onto your chart settings. And then all you have to do is, once you've saved it, all you have to do is double click on it to bring up the chart. So let's save that ratio, and you can see it shows up down here. We can X that box out. Now for the period from the beginning of 2010 through 2011, all the way up into May of 2011, it looks like Oracle was outperforming Microsoft by a tremendous degree. So Oracle would have been a great buy at this time. So remember, if the chart is going up, the first issue is outperforming the second issue. As the market started to decline, you can see then all of a sudden Microsoft started outperforming Oracle. So it would have been a time to switch out of Oracle and get into Microsoft. And in fact, that performance is still declining rapidly. Of course, Oracle came out with some missed earnings and sold off dramatically here, so Microsoft definitely outperformed Oracle. Now, in some cases, okay, this isn't always true, but in some cases, you could actually go long Oracle and short Microsoft if you wanted to do a true ratio pair trade. And in this case, the case that most professionals are using, though, however, is simply getting an idea. If they think a particular sector is going to be strong, what they want to do is they want to see which one is the strongest issue of maybe a pair or maybe more. So you're going to take maybe Oracle against Microsoft, and then let's say we want to use we want to compare somebody else to Microsoft. Use IBM. You can see that IBM has dramatically outperformed Microsoft and continues to outperform Microsoft. So in this case, you might want to say, okay, well, both Oracle and IBM or outperforming Microsoft. And in this case, what I really want to do is go long IBM and Oracle, at least for that time period. Now, you may have wanted to get out of your Oracle when you see this topping out here and starting to decline. And the nice thing about ratio charts is that they work great with simple trend lines. Simple trend lines really work with ratio charts. So you can draw a very simple trend line, and when it breaks that trend line, you're out of Oracle. And that's all there is to it. You want to go long Oracle when it's outperforming Microsoft, and then maybe you want to do, if you're looking for other trades, you want to look at IBM. It's absolutely great to set up these trend lines. They work extremely well. So at this point, you would not get out of your IBM. It's still outperforming Microsoft in a dramatic way. And so you'd want to stay long. Now you might even want to short Microsoft. Long IBM, short Microsoft. It works the same way. Here's a couple others that I really like. I use the SPY against the VXX. You can see from the period of May 2010 all the way through the volatile top here in June of 2011. It was great to go long the SPY. The SPY was definitely outperforming the volatility index. Now, once of course we started to get a lot of volatility at this top, and we broke the trend line, we want to get out of that trade. So we're going to take a look at this. And as soon as it broke that, of course, I'd want to get out of that trade. Remember, this is early volatility. This is late volatility. You want to get out on the second volatility. So this is a great trade. So you know, as soon as you start to see these very small, very easy, easygoing kind of small moves, these very tight ranges in this chart, you'd want to go long the first issue, in this case the SPY, and you want to get out when it breaks that long-term trend line.